Okay, welcome to the Not an Agent channel, a weekly show about real estate with a particular focus on issues impacting Canadian real estate. And that was scripted. I don't know if you can tell. So I am Daniel, or Dan, or Danny, and this is Jeff.
I'm Jeffrey. You can call me Carney too.
Okay. So we're going to talk about the issues, the stories that have been happening in real estate, mostly in Canada, because that's where we both are. But we're going to touch on maybe some US, Australia, UK, if there's stories that are interesting or funny. So the first one we're going to go with is the insurance costs skyrocketing, specifically in Vancouver. I don't know anywhere else that's seen this, even in BC, anywhere else that's seen higher insurance costs in condo buildings.
BC, not so much, but we are seeing it in Alberta. Fort McMurray, for example, they've had some insurance increases. Some of the condos in other cities where you might have high rates of claim have seen similar increases, but we haven't seen anything across the board like this.
And is it outside of condos, apartments, buildings?
I think the general thought is that the larger buildings where there's a higher amount of risk across more units are seeing the increases more frequently right now.
Okay. So we've seen increases from like 20% up to 400%. Is that?
There was a building in Abbotsford as well that reported receiving a 780% increase.
Oh, oh, that's substantial. And they're either what's it called? They're doing a one-time, what do they call that?
I think it's called a levy or a special assessment.
Special assessment, yeah. So
Yeah,
they're either doing that or they're just upping the strata fees.
yeah. It really depends on when the new budget for the strata comes into play. If
Mm,
the new budget isn't for another few months, they're forced to do the levy to cover off the costs, or dip
right,
into the contingency fund.
right, right. Another reason to check into that stuff when you're buying a condo. See what their
Yeah,
contingency fund is. See if they've done the maintenance, right? Because that's a lot of the buildings that are getting dinged haven't kept up with major maintenance.
yeah, absolutely.
And the
Um,
other aspect to the story is some buildings can't get insurance at all anymore. So
that's right.
you can't really sell your condo, or the market for your condo is just nothing because you'd have to be a cash buyer basically. And then
That's
even
right.
then, who's going to buy a condo that can't be insured?
Yeah, if you can't leverage your money into that condo, it's the value of it drops quite a considerable amount. So someone putting a down payment, a 5% down payment on a $400,000 condo, versus someone paying cash for the entire mortgage value of that condo, it really does bring down the. It also brings down the amount of buyers that can buy your condo at that point.
Yeah, so I'm guessing there's buildings full of people that are pretty worried to irate, maybe looking for
Yeah.
somebody to blame. So what what do you think is going to be, is this going to amount to anything, or is it going to be like a thing that we're going to have to deal with for this year and they'll figure things out for next year? Or the other one is the government stepping in. That's
Mm-hmm.
one, like people's imaginations just run wild when they talk about, because these buildings full of irate people whose condo values have just plummeted because of insurance. They're like, okay, come save us. And
Mm-hmm.
some people are, okay, are we going to socialize this problem, or is everybody, all the taxpayers, going to have to bail these condo owners out? So
Mm-hmm.
what do you think is going to be?
I think that the rates will stay. I don't think they're going to go down. I don't think that we're going to see. I don't think we're going to see a socialization of the insurance, and The reason I say that, we can socialize car insurance because cars are quite replaceable. Real estate, it's not as replaceable. You can rebuild it, but you can't just put someone in a new house if their house is burns down or whatnot. So you quickly see those costs rise and get out of control if you were to socialize it, because people would very quickly learn how to take advantage of that situation. I think what we're going to see is we're going to see a lot of special levies, special assessments this year. And then as the budget comes out, you'll see large condo strata fee increases. So you might see where previously you'd been seeing a 2-3% increase in condo fees. You might see something more in the order of 10, 11, 12, maybe even 15% increases. So if you look at a larger unit at about 1,300 square feet, a 1,300 square foot unit, that's a fairly large condo. You can probably be expecting to pay around $700 for that a month. So add 15% onto that, and what's that done for your affordability?
And you were doing some maths about how much impact that would be as far as basically purchasing a condo, and it wasn't massive. It was like one figure you had was like 17,000 or something.
Yeah, 17,000, $20,000. The rules when you're purchasing a condo, if you're going to be living in it, you only have to put half of the strata fee towards your B20 stress test. So they assume that because you're living in it, that's reducing some of your other costs that they would normally take into consideration. Where this is really going to pack a punch is people buying investment condos, because they're going to have to take the entire strata fee and apply that as part of their stress test.
Mm-hmm. So, if is there going to be any market impact? Is it going to push prices down in any way? It, I think the big one is the buildings that can't get insurance at all.
Mm-hmm.
That's the big one. Because if
Yeah.
you look at strata going up, from I don't know what strata is around there, like $400 to 600 to 700. It's not fun, but in the grand scheme of buying a $500,000 condo, it's maybe not that big. But I think the condos not the condos that can't get insurance at all, that's a big thing.
Yeah, it's a risk for sure. If your strata burns down and you don't have insurance, that comes out of your contingency first, and uh, you're going to have a shortfall when the mortgage comes due. So, I mean, that might be where we see some government intervention, is if a strata wasn't able to get insurance and there's a major loss. Uh, perhaps we'll have some bailouts there. How often that'll happen, I'm not sure, but I could see that being where the government might step in. But it's definitely has the potential to ruin a lot of people.
Yeah, yeah, yeah. So that's we'd have to see how that plays out over the next year, basically, to see to make any predictions on that one. That one's kind
Mm-hmm.
of tough. So the next one we're going to talk about is a fun one: the infrastructure build quality problems going into the future. So there's been if you're on Twitter, you've probably seen some of these. There's been a Twitter post from somebody. Is it Brenton? Is that
Yeah,
him?
Brett and Krellin.
He posted he's working on well, he put it on. It's out in the open now, so I'm not outing him. He put a Twitter post of a building he's working on in some capacity, and there's
Mm-hmm.
water flowing in through the foundation,
Yeah.
and the caption read something like, "Oh, it's right there. The condo I'm in will flood one day, but I will probably lose my job if I elaborate further." I
Mm-hmm.
don't know. That's what more could you possibly say? But
Right, and I think we're even seeing that in other areas. If you look, there was a condo in Port Coquitlam where it was built under the water table. They didn't put enough pumps in the basement, and so regularly the parkade's flooding. They have to shut down the power to the building. Like, how inconvenient is that? If you're a resident and it rains, every time it rains, your power goes out, and your
yeah,
caretaker get it.
yeah. I mean, building a building that relies on pumps. Hmm. There's
Yeah,
your sign. Maybe don't buy into that building
exactly.
again. How many? Okay, so and is that a newer building? That it's and like
I think most of the buildings that you're looking at that have these problems, they've been built in the last 10 years. That's something that a resident, like your strata board, is going to want to get that fixed because it's inconveniencing everybody, and you can't just leave it. Uh,
so back when they were being first sold, like after the fact. Now, once the issue comes up, it'll come up in the strata meetings, and you'll be able to look at that. So if you're a buyer at this point in these established buildings, you should be doing your due diligence, and you should see that in the strata documents, right?
you should see it in the strata documents if the strata is working towards fixing it and they've decided to put it into the strata minutes. Sometimes you might get a situation where you have you don't have enough board members. One of my friends recently was looking at a condo building. We reviewed the strata documents, and in those strata documents, they only had one owner that was on the board, and then the other board member was actually the manager from the condo management company. So you can see how when you've got that really close connection between the management company and the board, where the management company is half of the board, everything might not make it into those strata minutes. So you really have to watch the structure of the strata and see if problems are actually being reported in those minutes or not. So it takes a little bit more analysis than just seeing if the problems are actually in those documents, because often they're not.
Yeah. So there's why you want to get a good agent, someone who's gonna do the due diligence and
Mm-hmm.
work for you.
Yeah, and there's also there's companies that specialize in reviewing strata documents.
Right.
So that's I'd say
So is it more like a building inspection type thing?
yeah, something to that effect. It's like
Okay.
a forensic look at the overall condition of the reserve fund and looking at the minutes to see if there's anything funny going on.
So at the end of the day, the responsibility isn't the real estate agent, although if they could point that out, it'd be great. But
Yeah,
it's your responsibility to get a inspection, and the inspector needs to be able to find that basically.
yeah, buyer beware.
Buyer beware. So I guess the flip side of that is we're talking about the people who bought them after the fact, but the people like buying them now,
Hmm.
which you know you probably don't want to buy the building into the building that's flooding, but the people who initially purchased, they couldn't have known that it was going to flood. You know,
That's great.
they're kind of screwed. They're kind of left with the mess.
Yeah, they're left having to clean that up. They could have some recourse against the developer if they catch it on time, if permits weren't correctly pulled. Uh, but really, the court system in Canada, takes a long time to get your cash out.
Mm-hmm.
Uh, if it's causing you an economic hardship because now there's another special assessment to repair your basement, by the time that the strata council gets their money out of that, you're not going to see a penny of it.
Yeah, they're dealing with that in Australia in a big way. They've had a whole rash of buildings that the concrete is fracturing. They're hearing
Mm-hmm.
snaps, of just things breaking in the building,
Yeah.
and they are also um, having the same issues where they're building parkades. Like I think it's like multiple levels of parkades below the water table, and
Mm-hmm.
some of this is coming out now. Some of it may come out in the future.
Mm-hmm.
And in Langford, in Victoria, there was a building that was, I don't know if evacuated was the right word, but people had to leave. So it does happen.
Yes. Yes. It's interesting to see it happen here now as well. And if you think about the that development where sinkholes are opening up all around the homes, and they open up their BC assessment notices for 2020, and they're assessed at $1.
Yeah, yeah, on the Sunshine Coast,
right? So
around Sea Shelter or something.
yeah, so who's compensating them for that? They're not going to be able to get insurance. It's
No,
done.
no, their BC assessment is $1, I think.
Yeah.
I should pull,
So
maybe I'll pull one of those up. Yeah,
right.
that's pretty crazy. And the thing that they were complaining about was the BC assessments drew a line in the sand. So on one side of the street is basically a line where everybody on this side of the line is fine. Everybody on the other side, your property is now worth $1.
Wow. I can't imagine how that must feel.
And what do you do? You know, what do
Yeah.
you do? So, as far as if you had to guess, do you think there's going to be a lot more of these kind of things moving forward? I'm talking specifically in the Lower Mainland, Vancouver region. Do you think
Mhm.
there's going to, because there's been such a big building boom, do you think over the next 10 years some of that, there's going to be buildings that have problems?
I think that in 20, 30 years, real estate agents will be taking their clients through some of the buildings that were built in this era, and some of the wisdom that they'll be passing on is, well, that building was built in the 20s. You might want to stay away from it.
Right, right. There you go. That's pretty profound. Um, yeah, I would say it's going to be interesting. It'd be interesting to see a chart of the rate at which these things were being built, the level, because I talked to a friend of mine who's in the trades. I think he worked in Vancouver in the trades, and one thing he mentioned was that in these building booms, one of the problems is that you don't get the pick of the litter as far as
Mhm.
employees go. So maybe the developers don't get the best contract subcontractors or whatever, and the companies, the actual companies, don't get to pick the best. They're just getting whoever they can because it's full employment. Everybody, all hands on deck,
Right?
even the ones that shouldn't be there. So
Hmm.
it's going to be interesting to see how it unfolds over the next, as you say, 20 years.
Yeah. Uh, I think the if you if you really analyze what's happening right now, and you take the anecdotes that you're hearing, and you think about how many tradespeople there are out there and how many you actually know, um, this is happening quite a bit, and it's not just residential; it's also commercial. Um, so we're going to start seeing commercial properties having the same issues. Um, I have some personal anecdotes as well from a family member who uh, witnessed some of the steel coming over now that even the building materials that we're using are substandard. So it can be frightening, and you hope that the materials that are being put in and the engineering that's required is requiring an overbuilding so that if one of these components fails, it's not going to be catastrophic to the point where you see some of these buildings in Asia where a 10-story apartment block just falls over into the next lot like a domino.
Mm-hmm.
Uh, so you hope that the engineering for the land around the foundations for these buildings is sound. But
Well, there's so many
time will tell.
layers. There's the building code, there's the
Mm-hmm.
builders, there's the inspectors. There's so much room for errors, Are
Yes.
are they inspecting all the materials? There's some big important integral, steel components. If they're broken,
Mm-hmm.
it's a huge thing. So there's so many layers of problem. And the fact that even one building means that it isn't a perfect system, which is scary. So there's
Yes.
a whole building in Langford that got evacuated. That
Mm-hmm.
shows you that there are things that fall through the cracks.
Mm-hmm.
So that it might be the chances of it being a one-off thing, the chances of that building flooding the car park or the basement being a one-off, pretty slim in my estimation.
Yeah, and in my experience, it has to get pretty bad before they'll evacuate a building. It can be pretty bad and people are still living there.
Oh yeah, they slow walk it too, because
Mm.
it always begins um, at their discretion, right? Maybe you should move out, and then it escalates to okay, you have to move out, because that's how
Right.
it happened in Langford. It was like okay, maybe you get your stuff out, and then suddenly
Yeah.
it's like no, you're leaving. So
Hmm. Now, to the other point, though, with all the inspections that are required, oftentimes the added cost for that leads to some of the deficiencies that you might find as developers are looking for cost savings. So it's really is it's a double-edged sword where you you might be adding in more regulations to make the building safer, but in effect, because the developer still needs to try and make a profit. They're still trying to sell a house, still trying to sell a building. They cut corners elsewhere, and unfortunately, the regulations may not catch that, or it may happen after the fact of the original inspection. So, all around, it's not a great time to be buying a new build.
so okay, so that's an interesting quick point. So what would you look for? Like a 20-year-old building, if there's problems that are gonna arise, like big structural things, if it's
Mm-hmm.
20 years old, are you any safer?
That's a good question too. I think the 20-year-old building, you're still seeing some of the leaky condos that are out there. Um, they still haven't been fully repaired in some cases. So, perhaps not. But on the other side of things, when you buy a building that's house that's been renovated, maybe they've renovated it to fix things. Maybe they've renovated it to hide things. You really have to be careful with that.
Yeah, and
Uh,
you don't know who. I mean, if you got a keen eye, you can kind of, because there's people that just people that renovate places, and then there's people who renovate through a contractor, and if you know what you're looking for, you can kind of tell if some guy decided I'm gonna tile something and
yeah,
try it out, you
yeah.
know. So one of the big things, the most recent things, was the mortgage stress test change. We wanted to cover that
Mm-hmm.
because I don't know. What are your thoughts on that? Is it a big deal?
I think right now it's not a big deal. It's going to move the needle just as much as the strata insurance. It increases people's buying power by about $17,000, $20,000. It's not that big of a deal at current interest rates. Where it's going to be interesting is when interest rates start to change, um, because when interest rates start to change, that's going to change what people can qualify at again, because you're not using that set bank rate limit anymore. So, TD's 5 year limit is at 4.99 now. The average mortgage rate that's being insured right now is 30 basis points lower, so 4.59 ish, 4.79, whatever it works out to. Really, that part of it's not going to change much. But what it will change is if the rates go up all of a sudden. So say the interest rate goes up by half a percentage point. That half a percentage point, that's going to mean that people can qualify for 20, 30, 40,000 less depending on their situation. If it goes up a full percentage point, well, that's taking out maybe $100,000. And that's immediate. That's not the bank setting their 5 year rate. This is what you have to pay in a difference if you pay out your mortgage early. This is based on what people are qualifying at and getting mortgage insurance on. So it's not set by an individual bank anymore. Now it's set by an overall trend. So as we see people renew and have to reinsure their mortgages if they're changing lenders, etc., it'll be very interesting to see what the banks do with that. Some people say that they're going to go into negative rates. I think they might raise it up a bit.
Yeah, I think in the short term, I think predicting is hard, but if anything, I think they'll stay about where they are. They might move a little bit, probably down. If well, you know what? I'm not gonna say. They'll probably stay about where they are. Okay,
Right?
so I don't think that's gonna be a huge mover. Like you're saying, this is gonna amount to in buying power maybe $17,000. It's
Mm-hmm.
not it's not a huge amount when you actually look at the numbers. But the other side of it is the FOMO. So I would say that the FOMO would have more impact than the actual the dollar amount that it's going to change.
The spin.
The spin and exactly it depends on the people spinning. If they can say, you know, there's just going to be a buying spree in April. They tell their clients, in April, buying spree. It's crazy. You better buy now. There could be, it could, but again, I don't see any part of this that's going to be move the needle in a big way, because there's going to be another group of people that is going to say, you know what, and they're wrong, but they're going to say, I'm going to wait till April because I'll get to borrow more.
That's
Yay!
right.
I'll get to borrow more. And, what's going to happen is everything's going to compensate. Uh, there have been reports of real estate agents telling their clients, just hold off on the sale until April. You'll get
Mm-hmm.
3% more for your house or whatever. So
Right.
there's going to be a segment of sellers saying, I'm going to wait till April and sell then. And those buyers are going to wait till then. So what's going to happen? The buyers are going to have whatever, $17,000 more. The seller's going to list for $17,000 more. Everything evens out. But
Mm-hmm.
it's not, it's, I don't see it being a big mover in the market. And you think,
I think it's such a small amount that
yeah,
it's not going to, like, that in itself isn't going to impact much. We might see a small spike, but uh, nothing that's going to change the HPI, the home price index.
and it's insured mortgage. They're putting it out to the public to see if they're gonna add this policy to uninsured mortgages. I think that's what I read. Right now, it's just gonna be that 20% and below down payment.
Mm-hmm.
So
Now, there is an interesting point with that. The insured mortgages aren't only the high loan to value. You might I have one anecdote from a mortgage broker that I talked to. There was someone who was here working on a visa, didn't have permanent residence status, wanted to buy a condo to live in while they were here. They had 20% down. They still needed to get mortgage insurance for that mortgage.
mhm.
So the lender can still ask you for mortgage insurance. Now, what happens if the regulation is changed so that alternative lenders also have to start asking for mortgage insurance?
Mm,
Suddenly, higher rate mortgages are going into that weekly average.
mm.
So that
But
could,
but at the end of the day, I think we're both on the same page. It's not gonna move the needle in a big way.
no,
Although
not at
some
all.
people are gonna say, people in the right place are gonna say, "Ooh, this is a big deal."
Mm-hmm.
But we're
Yeah,
telling you, not so much.
right.
Believe who you want to. Okay, I've got insolvency filing. Uh, that's a pretty big. That's a pretty big deal. Insolvencies and consumer proposals, they're spiking, and they're spiking amongst renters,
That's
from
right.
what I hear.
Yeah. So when I look at that, I think back to when I was renting, and I think about some of the spending habits that I had because I didn't have a mortgage to worry about. And really, it's a different mindset when you're renting versus when you have to maintain the loan on your home. So, I mean, from an insolvency perspective, if you can't have your home taken away when you file the insolvency to get out of debt, I think renters are definitely more likely to take that route. Now, that said, you're also more likely to take that route when your costs spiral. You're also more likely to take that route when your costs skyrocket because you got rent evicted, have to put down a new damage deposit, and maybe your landlord's not giving you back your old one. Mm. When all of your costs are going to rent because you're already paying a high rent, and suddenly you find yourself in a higher rent situation, you're not able to service your debts anymore. So you're going to go file an insolvency, and that's what we're starting to see. If you follow Scott Terrio on Twitter, you'll see stories of this week over week, day over day. One that I saw that was particularly interesting was an 18-year-old. Okay, so 18 years old, just old enough to start signing contracts, filed an insolvency with $55,000 in unsecured debt.
Ooh,
I
sounds
don't
like
think
he
I've
was
made
having
that much
fun.
money.
What was
Yeah,
he doing?
exactly. I don't know.
An 18-year-old with
18.
$55,000.
Yeah.
How does that even happen?
That is a good question.
How does And that's scary.
It is.
I mean,
It is
unless it's an isolated thing, which it almost definitely isn't.
Mm-hmm.
How does that happen? That's crazy.
Yeah.
So that's going to be an interesting one to follow. I mean, it does make sense on so many levels, and the rental landscape in a lot of places, even in the smaller towns, is terrible. I mean,
Yeah.
that's what I hear. It's terrible. Like, it's slim pickings. I guess Vancouver maybe in some of the segments is getting a little bit better, but it's outrageously expensive. It's just zero fun. Same in Toronto, so
Mm-hmm.
it's gonna be
I think
interesting.
when you follow some of the community groups in your community too, you'll see how much of a problem it is. I think once a week I see someone looking for a room with their child. Usually it's a single mom, to be honest. They're looking for a 1 bedroom, 2 bedroom place. They have a budget, and they're saying, looking for this place by the end of the month. So, did they get rent evicted? Are they fleeing domestic violence? Like, who knows what the situation is? But there's always a need for housing, and there's always a need for rental housing, all sorts of situations. And unfortunately, this rental crisis, we can call it, is driving people into these insolvencies. It's keeping people in bad situations too, I'm sure, and putting them into bad situations as well, as evidenced by the amount of insolvencies, evidenced by the increase in homelessness that we're experiencing in Toronto, Vancouver. So now, what does the insolvency mean going forward? I think that I don't think it's going to impact landlords in the short term because they're still getting their rent, regardless of whether or not their tenant went insolvent. I think it is going to change the type of tenants that people look at in future. If everyone's claimed insolvency, you can't use a credit check anymore, right? So it's definitely going to change the landscape.
Yeah, for sure. And if you look at the graph, it's moving up. You can see the momentum, as it were. The momentum is. It looks like it's gonna get worse. It's gonna continue and get worse.
Yeah. And I think the other thing too, I've seen this before. I used to work at a call center where there was 5,000 people working there. And the amount of insolvencies that I saw around 2008, 2009, and I'll call them insolvencies, but everyone calls them consumer proposals. It was incredible. And that wasn't like we weren't high income earners. We were working in a call center doing tech support, but this happened before, and it happened around when we went through a recession. So I think it's a precursor to it.
Mm-hmm. So the next thing we were going to talk about is the FOMO. The FOMO is real. The FOMO is still here. Steve Saretsky was talking about it. People paying $100,000 over list for, I think it was a $500,000 property and a $600,000 property. So list at 5, paying 6, list at 6, paying 7.
Mm-hmm.
And he was saying that he would have assessed them at 520 and 620.
Right. Right. And I think one of the other quotes was, what do you say to a client who just bought a condo worth 520 at 600,000? Do you say, congratulations, you just paid an egregious amount for that property? Do you congratulate them for overpaying, even though they got it? So, yeah, the FOMO is definitely back in the condo space. But I feel like it's only back in the condo space close to the core. Chilliwack's had a really slow month in condo sales. So there's something going on in downtown Vancouver East Side, that's making people snap up those condos.
And I think it's in a specific price range. It's not in the luxury market.
No.
Like FOMO is in what I've called like the people who are just getting into whatever they can.
Right.
Like, okay, we can't afford a house, can't afford a townhome.
Mm-hmm.
We can afford a condo, a small condo,
Right.
like a 1-bedroom or a bachelor.
Yeah.
They're being forced into that, and that's
need-based buyers.
Yeah. I guess they need to not commute an hour and a half. They need to be right there, right? So it's, needs is subjective, right? So
I think when you look at an hour and a half commute, that really depends on a lot of things. You could live in Abbotsford if you wanted to, and save $200,000 on your mortgage. Makes childcare really hard.
right.
If you get in a traffic jam, you're like, the savings on your mortgage is going to be eaten up by daycare overages pretty quick.
Right. So it's not like they're being unreasonable to want to be near the downtown core or wherever it is they want to be. If they work down there, there's a commuting savings, basically.
Commuting savings, I think if you're looking at someone who's got the money to put down, they might not value the money as much as they value their time. So unfortunately, not all of us are in that situation, but there are handfuls of people that are. So if they want to overpay for a condo that they're never going to get their money out of, that's fine by me.
Yeah, you really got to want that condo.
Yeah.
Really, really, really. I mean, maybe people have just, it's the new normal, and they've just, they walk into their, 400, 500 square foot condo, and it doesn't seem crazy that they spent 600,000. I don't know. I'm not saying that these condos were 400, 500 square feet, but that does happen. I don't know what goes through somebody's mind. It's like what you're saying. Do you congratulate them? I don't know.
Yeah. Congratulations on that purchase. Yikes. I think that condo went for, if I remember correctly, I think the dollars per square foot was 1,089. So it probably is 500-600 square feet.
Right. Which,
Yeah.
I mean, I kind of have to pull it back a bit. I don't want to bash these people who just bought their, maybe it's their first home. Maybe they're, a young, young person who got told that real estate is great and it's their first condo and they're like, this is great. I'm right downtown or whatever. What good could we say about that? Hold it for at least 10, 15, 20 years and there's, you know, not so much risk really. Hold it for a long, long time and there's very little risk, even if the market corrects.
Mm-hmm.
Looks like you're trying real hard to find some upside to this. We'll move on. We'll move
Yeah.
on. Okay, so we've got two more. We do have a little blurb. I'm gonna burn through that. So this is a Reddit post, and it's under the FOMO. So it says, "Don't give up. I looked for literally 2 years. They looked for 2 years. I went to countless open houses and put in more than 40 offers. One time I was waiting in the hallway of a building I really, really wanted to get into at 11 p.m., but the realtor was this old witch who was taking offers in person with the owners and having mini meetings.
In
I had
person offers.
I had already offered way over asking, so I told the realtor to come back, blah 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 blah. Don't give up." This person is saying, I guess they bought a place, 2 years, 40 offers. I mean,
Mm-hmm.
you have to value your time at a certain point. 40 offers, it takes time. You've got to go look at these places. You got to go meet with your agent. You got to sign the papers. 40 offers, 2 years.
Right. And then, yeah, that's a lot of paperwork. DocuSign makes it a little easier now, but going the travel time, like I'm,
And
if
that's
I'm,
and that's 40 offers. Who knows
yeah,
how many houses or condos they looked at?
yeah. I mean, personally, I've probably been through. I'd say I've been through every house that's been for sale, but I've probably been through about 500 homes since I moved here. Just looking at places, trying to understand where the property values are going, what people are valuing, and it gets to the point where you can look at a listing, you know what area it's in, and you can see which listings you don't want to even take a look at anymore. Um, and it wears on you. I think when you put in 40 offers, that's 40 disappointments, right?
Yeah.
You lose 40 times. It's kind of the salesperson's mentality where you have to get through so many no's to get to a yes.
Mm.
Um,
But you're really getting a read of the market after all that legwork.
yeah, absolutely. And yeah, the other interesting thing that I've seen is boots on the ground myself. There's been the same people at a lot of the open houses for the same length of time. I keep running into the same people at these open houses. So, if you are looking for a place, you're not alone.
Mm.
There's a lot of people out there that can't justify the cost, but they still want to look at what's on the market.
Right. So, how many, as a percent, would you say are looky-loos with no real intent to buy?
At an open house,
Yeah,
99%.
99% have no intention of putting an offer in.
Yeah, that's right. I'd say the people that are serious about making an offer probably come through with an agent.
Right. Right. Are there? Are they do? I don't know if you've been in the area long enough to see the trend of open houses. I know that in my area, it's fallen right off. Like no one's doing open houses. They don't need. They don't need to.
They don't need to, as in they're selling quickly, or
Yeah, they're selling. They
yeah.
they don't need to. I don't think agents really like doing them. They'll
Mm-hmm.
do it to make it look like they're doing something for the clients. If they have a client that requests an open house or something like that, or they want to
Right.
move it really quick. They want to
Mm-hmm.
really move it quick. I think maybe.
Yeah, that's interesting. So I was looking. I was looking at a couple of reports that showed the amount of transactions that we're going through. Out here in Tri-Cities, transactions have fallen through the floor. The prices went up again in 2017. Transactions were really high in 2016. Uh, Even though the prices went higher in 2017, the transactions were about half. So you'll often find that open houses are ways for real estate agents to meet new clients.
Ah,
So you really got to think about that if you have your house for sale. Do you want to allow them to use your house as a marketing engine? Um,
right, right. They get to shake a bunch of hands, put their sign out with their picture on it.
yeah,
That's a
exactly.
good point.
Yeah.
That's a good point.
In terms of volume, there's a lot of open houses out here, and I would say that's likely because nothing's selling.
Okay.
Condos are selling, houses not so much.
Okay. Okay. That's interesting. So next we've got mansion rentals. 4 to 5 thousand for an executive level rental house is pretty standard. 25 to 3,500 is normalish. So this is a quote.
Mhm.
Nothing special. 4K is standard. So this is mansion rentals. 4,000 a month is standard.
And so we're looking. This quote's coming from someone who's looking in Ladner and Tawasin, White Rock, in that area. So one of the sunnier areas of Metro Vancouver, because they've got a banana belt climate there. So you'll find that a lot of people like to be in that area,
A
even though
little
it's,
microclimate.
yeah, a little microclimate. So even though it is pretty far from everything, to get to Tawasin, you got to drive for an hour. But
Right.
um, but yeah, it's sunnier, it's warmer, and the housing tends to be a little cheaper. But yeah, so he was saying that the at the places he's been looking at. So you're looking at all these empty mansions now that they've been sitting empty. One of them, it was they're asking for $6,000 for it, and you might be able to bring up some of the pictures here. So yeah, they're asking for $6,000 for it, and the entire place, you could tell that it was infested with rats. It smelled like rodent urine, and there's no way it was anybody had been living in it for the past few years. When you look at the transaction history for it, it was bought in 2016, so at the height, and then it was just sitting empty. People were waiting for the market to come back, never did, and now that the market hasn't come back, they're starting to rent them out.
Mm.
Uh,
Or it was. Uh, See, I have to be so careful live. It was. I'll just say it. It was a Chinese buyer who had every intent of just leaving it empty, but now that there's an empty home tax and there's all these empty
yeah.
home taxes,
Mm-hmm.
now they have to.
Now they got to put somebody in it.
So I have to be so careful about that. 'Cause people get uppity.
They probably will. They probably will.
Send your hate
I
mail
mean,
too.
look, you can pull title on any of these houses, and you can see who owns it. Um, if you want to take a look at houses that sold for more than $3 million in 2016, and you take a look at 10 titles, just 10 random titles, take a look at them, and the first person, just one person, that comes back to me with 10 titles that you pulled for houses over $3 million that were sold in 2016. Uh, if all 10 of them don't have an Asian name attached to them or a corporation, I'll send you a $10 Tim Hortons gift card.
There you go. The hunt is on.
Hmm.
So, I mean, the trick is, and it's very nuanced, but there are local people with Chinese last names that were born here. They probably don't have a Chinese first name.
Right?
It'll be Henry something,
Mm-hmm.
or,
Joe?
Sarah something. Just something to look for. So I think was there anything else you wanted to hit up?
No, I think that's it. I think the it's covered quite a bit. Um,
So, suggestions for next week's episode, because a little backstory to this: we've been troubleshooting computers for hours, probably a total of 4 hours together, and then individually we've been troubleshooting. So
mhm.
hopefully we've got things nailed down and we can do one next week. I think we've got the settings done. So if you have any suggestions for next week, leave them in the comments.
Mhm.
And is there anything else?
I would just say we are not financial advisors.
Ooh, that's a good one.
Right? So if you're going to make an investment decision, don't do it based on what you heard in this video. Talk to your financial advisor.
Yeah, or any video really. Okay.
Especially ones you see on YouTube.
Yeah, yeah. All right. Well, we'll see you next week.
So long, everyone. This has been Not an Agent.